What's going on, everybody? 360 Digital Closing Bell Week Ahead podcast. Buckle up already, guys. This is a wildly busy episode number 51 we have. We missed our 50th birthday last week, Stu, by the way. We didn't do any sort of celebrations. We are now officially an old guy, which is weird to say. We're sitting here. It's 6:25 here on this gorgeous September 28th, 2020. As always, I'm your humble correspondent, Michael Tanner, joined by the executive producer, the purveyor of the show, international news aficionado, and all-around good guy, Stuart Turley, who's also the director and publisher of the world's greatest website, oilandgas360.com. How was your weekend? I didn't ask you that this morning.
It's a beautiful day in the neighborhood, and I did way too much for an old guy.
What did you do? I mean, I actually, you must have been working in the yard, because generally you're tapped in grinding, working. You were working hard. What you had going on yesterday?
I had a leak from the water main to my house, and I had to dig it out in order to get the plumber. So we had water at the house. So I joined the chain gang and was digging a long trench. Got a great workout.
Well, good. I wish I was handy, and we were just talking about my relationship status on the before this. Maybe that's one reason I'm single, Sue, is I'm terrible with DIY. I don't know how to fix a car. I'm the guy, just call somebody, or I need my dad's help. So maybe that's something I got to step up, put you through. I need to go through a Stu Turley boot camp.
Well, it is. It's very easy. When you have a girlfriend or a wife, become very horrible at painting. Just absolutely mess it up. Spill a can. You'll never.
I was looking for like, hey, you can help me out to fix a car.
No, you'll never.
I can change a tire. That's about all I can do.
You'll never have to paint in your relationship.
All right, we digress, people. We have a loaded show for you guys. I'm telling you, as Stu's got a bunch of stuff he's going to cover on carbon capture. Clearly, we're going to talk about the Devon WTX PX deal. We have a bunch of different little avenues. You know, how does Devon feel about this? How, if you're a WPX show, how should you feel out of the market? Sort of, all the stuff surrounding it. How does the Felix deal put into this? Or, let's not forget WPX was thinking about was solicited to be acquired in December 2019. I'm old enough to remember that. So there's a lot of different things we can cover that. As always, we'll cover the levels for crude oil and check in with the commitment traders. But first, guys, this show is brought to us by the world's greatest website, oilandgas360.com, where Stu is the publisher. Guys, it's the best website for all of your energy news, oil and gas news, tech, finance, energy. I'm telling you guys, check out our 360 news deck page, which is really our one-stop shop for all of your energy equity information. Really, we have all the top stories for the day. We have all our daily shows that we do live on YouTube, 2 p.m. Mountain Standard Time, where we basically spend 15 minutes running through what happened in the energy equity markets. We have charts, equity overview tables. It's basically Bloomberg Light on a website. So I highly recommend checking all of that out. Stu also runs the Energy 360 podcast, which is one of the best energy thought leadership podcasts on the market. You can find Energy 360 by Entercom on Apple Podcasts, Spotify, YouTube, wherever you get your podcast. Stu, who do you have coming up? I know you have a great backlog of guests. This is something I was going to ask you after the show. Who do we have rolling out this week? Who do I have to cut up?
A bunch.
I know we have Rob McBride from Inveris, which will be very interesting. I know we have Casey Johnson, president of Enzo Services up in Canada. I know we have two from Shale Specialists, but we might throw that more on the back burner.
Right.
And then I know we have Steve Reese, correct? Steve Reese, Midstream Consulting.
Yes.
I thought about that this weekend, by the way, another inside base. When you listen to the show, you get all the inside stuff. We got to reshoot that. It's good info. We just got to reshoot that. It sounds too bad.
Inside baseball. Yes, we want to make sure that we get it right. So
they're gonna have to send that back. All right. But it's a great podcast. We're gonna be dropping some of those. Do you have any idea what order they're gonna come out at this week?
I need to get through this podcast. We'll work on that.
Fair enough. So we've got a great backlog of stuff that we're going to be coming to you guys. It'll be good. So please check that out. Energy 360 by Entercom, Apple Podcasts, Spotify. You can also find it 360 Energy Expert on the Oil and Gas 360 homepage. Drop down Industry Insights. Great find. You can find a landing page. We got some great stuff going. All right, well, let's start with carbon capture, Stu. I think it's the best place to start because this is slightly comical, and I'm also just fascinated by this. First off, this blue ammonium story you've got from Saudi Aramco is awesome.
I'll tell you what. Before we get started, we have the theory around here, and that is we want to get all of the lowest cost energy to everybody on the planet. Let's elevate everybody out of poverty, and let's do it while we're good stewards of the planet.
But that's just because that's what the data and it's because the data shows that. It's nothing more. There's no I don't have a side angle here. You know what I mean?
Even though we're on an energy oil and gas 360, we are also energy 360. And we want to talk about nuclear. We want to talk about everything. So all that being said, this is all about being green. All right. Got that?
I've got it.
Okay, here we go. Exxon, I thought this was a good read and a good article. It was extremely well written. And when you sit back and take a look at Exxon, there's two reasons to have carbon capture: tax credits, and what's coming around the corner is ESG. ESG credits, almost all of our majors, BP, Shell, everybody during our BP week, they're talking about going to carbon neutral by, is it 2030, Michael? Something like that. And it's all around
it was like 2035. It's when I got to figure that date out because I have pledged to get abs by then.
Oh, absolutely. And so they're getting
follow me on my quest.
Carbon neutral. They're getting carbon neutral by taking credits on the goodness that they do. They're still going to be public, putting out carbon. Everybody's going carbon neutral. All right. Everybody's seeking carbon credits. Okay.
Yes, it's a fallacy that when a company says we're going carbon neutral, they're actually cutting their carbon emissions. What they're doing is they're purchasing credits in order to emit. Because as an economist, we take this class. There is a level of emissions that is required. There's a graph of you can actually put a number value. Now, it's not a great estimation, but you can put a number value on what a pound of carbon is. It's like $35. Anywhere from like 5, you can find ranges from like 5 to 70. I took environmental engineering or environmental economics, kind of a boring class, honestly. Didn't find it, but it's really interesting how you can calculate a pound of carbon cost. It's, the most average is here like $35.
Right. And
which is kind of expensive. How much do these guys emit?
Well, there's a bunch here in our we need to get our coworker.
That's why somebody needs to create an ESG like emissions, like almost Bloomberg terminal style. Somebody get on that.
I believe I know some guys working on that, bad dog.
Put me in contact with them.
Yeah.
What do you got?
Okay, so all that is to set the stage. You have Exxon up in the Balkan has had a carbon capture technology up there for many years. And you capture the carbon, you pump it back into fracking, and it bonds with the molecules in order to get more oil. Sounds great. Very cool.
It sounds like now there's a catch here.
Oh, yeah. Okay. They have had multiple accidents of having to close schools from the carbon CO2 coming up from the ground. So this is not Jed Clampett going, up from the ground came bubbling crude. Up from the ground came, by the way, a bunch of CO2.
Yeah.
So Exxon.
So is this, and this is where my engineering prowess goes. This is different than CO2 flooding, correct?
That is correct. So you sit there and go, anyway, environmental activists say that there's good reason to require rigorous, that sounds like Elmer Fudd, oversight. Exxon Wyoming's facility, for example, has repeatedly spewed unknown volumes of gas into the surface, most likely through the old wells as they try to get more oil out of it. A nearby school was forced to close after carbon dioxide was detected dangerously.
That's just horrible. See, I can get on the side of that's horrible, and we need to figure out and can't let that happen.
Absolutely. We want that gives fossil fuels a bad name. Carbon capture.
It's also just unnecessary. It's not like
Ex-
it's necessary, but we need to cover it up. No, it's just not even necessary at all.
Okay. Carbon capture credits. 44 million metric tons between 2009 and 2015 is what they've claimed. How much of that actually was carbon credits or pumping up through the ground through schools, hurting people? I don't. This pisses me off. I'm sorry for swearing. I know this is a family show, but
It's a real family show.
I'm serious, man.
Hard time. And so just give you an idea. Remember, so along this point, we were talking about solving issues. I'd be remiss. Last show I mentioned there was this company that I engaged with at one point. It's called Pioneer Energy, and these guys have mobile gas capturing and transporting technology that you can literally throw on your wells. It captures 100% of your gas, so you don't have to flare, and it's the way they've connected it. They'll just pump it right back in, either to back into the ground, they'll pipe it over to one of your injection wells, or they'll just hook it up with your other train. It's super easy. So, I mean, there's things like this out there where it's like, it makes me not sympathetic when this happens. You know what I mean?
And this goes back to our BP week and Exxon week and all this other stuff that they're not giving you the whole story. And I'm not a conspiracy. Well, yeah, I am. I'm a conspiracy theory when it comes to.
I was about to correct you. Fact check.
I fact check myself.
Love a good conspiracy.
I love a good conspiracy. Okay, so let's move on to Saudi Aramco.
Speaking of conspiracies.
Speaking of, I like the folks over at Saudi Aramco.
Oh yeah. They're
largest
company in the world.
They're good people. I'm not kidding. I mean, they've called us and wanted to interview us. They like us. So let's talk about blue ammonia. Okay. Ammonia is a very volatile, that's what blew up Beirut just recently.
Really? So that was what was in the sheds?
Yes. There were 2 explosions. And then ammonia, it blew out. And then the Oklahoma City bombing was 1 U-Haul full of ammonia. Okay, that was fertilizer. So we know it's very volatile. Now, how is the blue ammonia? The title of the article is Saudi Aramco sends first blue ammonia shipment to Japan. Yay! It's green. Yay!
But so it's a volatile thing that one can explode, but you can use it as a fuel?
Ammonia typically is. However, so you can use it as a fuel. But Japan will receive 40 tons of blue ammonia, which Aramco says has the potential of significant contributing to an affordable, renewable, low-carbon future. Here's the catch. You always got to look for the nuggets in this bad dog. And it is blue ammonia is produced from hydrocarbons in a traditional resource, but all of the CO2 generated is captured and isolated. Okay, so that is natural gas and oil is being used to create this blue hydrogen and blue ammonia, and everybody's going, ooh, it's green. No, it's blue. Anyway, that's part of the conspiracy theory is no matter what people are saying from the big boys, there is tax credits, there is ESG credits, and everybody's trying to go. This is going to be a long-term story for you and I, and that is trying to bunk carbon credits and trying to find out, follow the money, follow the carbon credits. We're off and running, man. This is a conspiracy.
Yeah, no, it's. I agree. It's follow the credits. It's look at this. Sorry, I'm just pulling up. Devin and WPX are going live for an investor conference. So I figured.
Absolutely. Go
I
after.
I had to pull it up on one of my screens. So that'll be interesting to see what they should be going live here in about 5-10 minutes. Hopefully, let's see. I've got I'm live here. They haven't really started anything yet. I don't know if the sound on, so we'll just see it. Got to see if any of the industry comes across the slide. Gotta love me a good merger slide deck. Should have some really wild non-GAAP information that will be cool to dive into. But
So are we gonna put non-GAAP in there with carbon capture credits?
well, it's this whole idea
nuts.
of credits is a super interesting idea, and this is where I would love to. Speaking of, we need to get people from School of Mines. I would love to go find especially some of these environmental economics, and really talk about how this industry as this underground market of trading credits work. Because what happens is there are I don't want to, there are examples, and they would never say this in their actual what was I going to say in their actual sorry, I got a lot going here. They would never say these in their actual merger agreements, but we went over a couple agreements that are sort of known on the street as this company bought this company solely for the credits.
Yep.
Solely because they had a stockpile of credit. So, I mean, there's an underground market for these things, and they're valuable if they have them. And so, yeah, I mean, it's, I think it's a necessary evil right now. I don't know what a better system is than selling credits. There's the idea of cap and trade, but that's
people are not going to understand, Michael, what they are. And until they understand that carbon, they're going to sit back and go, oh, Exxon, I'm just saying this, Amazon, everybody, all the big boys are going carbon neutral. Yay! It's because they're putting $100,000 per credit, whatever the number is. You and I need to open our own carbon credit company here.
We do.
And go, anyway, I had a few jokes there. Never mind.
No, I would be down to be the dealer of carbon credits. You guys come to us. I mean, we're getting a broker dealer license here. Let's start dealing carbon credits. I mean, we could.
Oh, absolutely.
Let's set a market for it. Let's do this. Let's become let's hedge. Let's hedge companies' carbon credits. That is a market we can break ourselves into. We will become the Aegis for hedging
carbon credits.
Done. New business model.
No, I was thinking more of becoming the Sopranos. Hey, you gonna buy your
you gonna buy your credits from me? I have a terrible Italian accent, so I'm not even gonna give that a shot. All right.
Complain about that.
I think we just need to go ahead. You actually got some other stuff here. You went.
Yep.
You got this Middle East stuff, and you touted something on the show Friday. You said you had some sources. Saturday, you didn't have a chance to tout it off in real time, so let me give you a chance to brag.
Okay. I'm breaking my arm as I pat myself on the back.
Yeah, I'll do the same thing. I'll do the same thing for you. Nice job.
Okay.
High five.
Hey, we've been talking about Israel. We've been talking about with the Leviathan field. We've been talking about the Chevron or the Noble purchase of all of its assets and everything else. Wonderful, natural gas going on, and Turkey getting in fights. This has all been over the last year since January, we've been talking about this. Israel, great news Saturday. I knew it was coming, and Israel to hold U.S. mediated talks with Lebanon on the sea borders, a major breakthrough in the Mediterranean energy politics. This is fabulous because the Trump administration had just brokered two other peace deals, and he got nominated for two Nobel Prizes. This one is so cool.
Trump, wait. Trump got nominated for a Nobel Peace Prize?
Two. And so this is even beyond that. There's more coming. So it is absolutely cool that Pompeo, our Secretary of State, is right in the middle of negotiating this one with Lebanon and Israel. And I am thrilled to see peace over the entire Middle East and Mediterranean, Club Med, trying to get to energy free or energy independent without war. It's all, I'm all about no no war.
I agree, and that's why I'm nominating you, Stuart Turley, 2024 Secretary of State. Can we
I
just
couldn't
start the
pass
campaign now? Can we start the campaign now?
I couldn't pass. Congress had ripped me all up. Okay. The second story that released this morning, which I kind of knew about, and that was Greece calls for peaceful resolution of East Med maritime disputes. Great news for the Mediterranean search for energy independence. So Greece is now trying to negotiate with the U.S., brokering this deal between Turkey and Greece. And this is phenomenal news because this is the second peace deal out of Club Med. That there's about two more coming up, and I'm hoping it's this week, but it may be next week on two more deals. So this is absolutely stinking great, and it's a whole mess, Michael, that is so intertwined between Turkey, Libya, them coming in. We've talked about all of this on the international news.
And I
desk.
still couldn't tell you all of the different ties. It's incredible how you keep it all together. You're the international news aficionado, the international man of mystery. You're just all over the place.
And I haven't seen anybody else putting all these dots together.
Yeah.
I almost feel like the conspiracy theory. Oh, who was it? Mel Gibson. Remember that movie where he was sitting in the closet and had all the dots all lined up?
I don't know.
It was kind of funny. But anyway,
I'm bad with movies.
The last thing on the international news desk is I hope everybody on the podcast can listen to this. But on the Oil and Gas 360, we have a picture from CNOOC, which is the Chinese oil company. And I got real tickled just at the picture that went out with it. The picture was from the source, and you see two Chinese oil field workers, and they're looking at a valve in shock. And with their hard hats on, they got gloves that can barely fit. The gloves coming up over it, and it's hanging down to his feet. It's kind of cool looking. And then you look at the guy on those right glasses. He's got little tiny glasses, and he's got plastic on the side. Can you see that?
He's got those little plastic things. I remember seeing those.
Oh, yeah. It's like one guy's got real.
To sound mean, but the nerds would do that in college when we would go to lab. They would have the little things on this. It was hilarious.
I put that out there, Michael, just because I thought every safety officer in the world would actually throw up.
Yeah, I mean, that looks too clean for PPE, and I'd be interested in what's the Chinese version of OSHA?
Ocean.
I wonder. Yeah, they just push you off. That's funny. That is funny.
All right. Anyway, it's been. Even though I was digging a trench in the Marianas Trench in my backyard, I did work a bunch on the international stuff.
No, I mean you rolled out a bunch of stuff. There's, I guess still on the international side, but touches on the U.S. side is CalFrac has come out and responded to Wilkes Brothers. As we know, there was this kind of back and forth. What I just find funny is you can go read this on Oil and Gas 360. It's just a press release, so it's 10 things you need to know about CalFrac's amended recapitalization transaction. It's from CalFrac's IR squad. So, I mean, just again, remember, I'm always about whenever you read something, you should ask who's it by and who's the sources. Who are the sources for this article? Because I'll tell you all you need to know about the information you're getting. So this is CalFrac's team right here, okay? So clearly this is going to be funny. One of their biggest things is that they're offering shareholders 15 cents on the share because what Wilkes Brothers is going to do is take it private.
Right.
But I think what the interesting part is they don't have common stockholders. They have if you go look, I pulled it up on Bloomberg, they only got 180 outstanding thousand common shares, and they're all held by institutions. I think retail holds 6,400 shares. That's what it looks like. If I do my napkin math right, 6,400 shares. So you're haggling. You're gonna. So statement one is specifically for 6,400 shares. It could be 3 people. That's just what kills me. It's like it's offering its shareholders the opportunity to receive 15 cents per share. Well, no one's getting that besides like 6 dudes. So who cares? That's why Wilkes Brothers is offering you $26 million in cash, because these bondholders now get equity in a company that's now private, because this is going to go private now.
You know, Michael, when I read this story,
I know 2 people who work for CalFrac. They don't have great things to say about that company and the people that are in charge over there.
I think the CalFrac IR team
Break any news, but
no, I think they watch our show, because when they heard all of your stuff, there were 4 out of the 10 things that you had already brought up on our show.
Well, if you're listening,
I
don't know what to tell you guys. Like you're not talking to that. It's just what kills me. It's just what
you
kills me.
did great though on your analyzation of this. After
we could run through all 10. I love number 8. Shareholders should be very skeptical of Wilkes Brothers claims of confidence being granted exemptions under Canadian takeover bid legislation to speed up. Blah, 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 blah. It's just like no one who it's hilarious. They write this to the shareholder, okay?
Yep.
This reads like someone should be. This is like reads like a bondholder. No one can understand this. No retail investor understands this.
You did. I mean,
I'm not a retail investor. I get paid to do this kind of. Not really, but it's my job to know what this shit means.
Well, yeah, and you're overpaid.
I'm way overpaid. I am grossly overpaid. But we are taking sponsorships opportunities. So if you want to continue to overpay me, please, we're open for business over here.
Oh, absolutely. And by the way, our reach is phenomenal. Shameless plug for both you and I.
Shameless plug for us. So in all reality, this CalFrac would be interesting. I don't know. Between me and you, I think this company I think we should hold its funeral. But
go ahead.
They're insistent on staying around. So as our favorite friends at Princess Bride would say, they're only mostly dead.
And the Monty Python says, I'm not quite dead yet.
Not quite dead yet. All right. I think we spent enough time dancing around what I think is the biggest, I would say, story that happened this weekend was kind of coming out of left field, Devon and WPX in a combined merger that actually is happening. They're holding a conference call as we speak. I'm kind of just trying to roll through some interesting nuggets that are popping up on this conference call that I'll kind of read off here. But to give you the high-level deals, current market value of about $12 billion, about $6 billion, but the total equity plus debt value is about $12 billion. So it kind of gives you an idea. Gives you kind of an idea of the debt sitting around. Let's see some of the interesting deals. Some of the interesting nuggets in this deal. Give me a second here. I was on the wrong page here. Here we go. All right, here we go. Couple different deals. So it's a $12 billion deal, as I mentioned, $6 billion in actual market cap. They're going to keep the name Devon Energy, by the way. CEO David Hager is going to move up to executive president or executive chairman of the board. What's the guy's face? Dale Moncrief. I'm saying his name wrong. Something McCreef. Richard Moncrief. Yeah. 62. He's going to be the new CEO of Devon. WPX's COO is moving over now as the COO of the company. It looks like Devon's general counsel staying this. No. WPX's general counsel is now becoming the new general counsel. Devon's current executive vice president of exploration and production, David G. Harris, will now be the executive vice president of corporate development. What is the chief corporate development officer? I could never figure that out. Is that just hey, we just don't really want to get rid of you, but we're gonna what do you?
He's a salesman.
They just closed the deal. What are they selling?
I
guess you're right. Interesting, but
hey, before we go on, I want to give a shout out to all my friends over at Devon. There are some fabulous people working at Devon.
Mm-hmm.
Absolutely.
Well, I mean, we'll look at it from both sides here because, like I said, I think people saw the headlines. I'm just trying to kind of give you things that are interesting that you may not read. I dug down into the numbers a little bit. Some interesting stuff. So they have I love reading the salaries just because I'm a salary guy. David Hager, executive chairman of the board. He's getting a base salary of $1 million. Incentive target of up to 75%. So 100 his annual incentive target's $750,000. That's nice.
Nice.
Richard, the new CEO.
Your
This is a
quota.
good. It's a good deal. It's a good deal right here. 1.1 million for the year, and then he's got a bonus of up to 120% of that. Plus, his
Wow.
annual long-term incentives of 8.5 million. Woo-hoo-hoo-hoo-hoo!
That's cool.
Woo-hoo-hoo-hoo-hoo!
That's cool.
That's nice.
Yeah, your quota just went up.
Yeah, my quote. Yeah, our sponsorship number just went up after reading this. So I know you guys were I know you guys are on the phone. Just know that quote number went up. I mean, there's some good stuff here. 75 million breakout clause if it's not agreed to by, what is it? It's like March. What is it? March 26, 2021. If it's not agreed upon, it's a $75 million exit fee that has to eat, depending on who terminates the deal. So, I mean, are we going to come into another Anadarko, because remember, before the whole Oxy catastrophe with Anadarko, Chevron purchased them. And that I wish I was doing the podcast around that time, because it's legitimately what happened with that situation with Chevron buying Anadarko and then Oxy coming to save me is the exact same thing that happened with the Denver Broncos when we almost grossly overpaid for Brock Osweiler, and the Texans swooped in and saved us and offered him like $1 million more out of the league within 2 years. So but all that being said, I think this will go through. I don't think it's going to stop. Highlights from the conference call here. David Hager says company understands maturing demand dynamics. That's a nice way to put it. That's maturing. That's what it is. You're right. Yeah, that's what it is. It's not demand destruction. It's not complete collapse in commodity prices along with an absolute devastation of forward-looking demand. It's just maturing demand dynamics. Give that guy a raise. $1 million too light for him.
Actually, that's what happens when you're married for 34 years.
Evan, CEO, just read the top line headlines here. Hager says we'll limit top line production 5%. 60% of their production is going to be made up in the Delaware Basin.
Huh. Interesting.
Yeah. Well, I mean, they're just going pure Permian. I mean, I think there's a couple things. So there's the highlights. I think you look at it from Devon's side. Maybe this is a merger to preempt an acquisition by a larger super major. Maybe it's that type of move. And from WPX, it makes sense. How do you get acquired by Exxon quicker? Well, you merge with somebody else, create now a $12 billion company, and let's see if now in 6 months, if commodity prices recover a little bit, you're now 60% hedged or 60% in the Permian. Let's get some, call up our friends at Aegis, get some good hedges in place. I don't know. Maybe there's an attractive opportunity to get really purchased for a nice big number. Now, I don't know. I think the Oxy deal has scared people. I don't think you're going to be seeing those those $30 to $55 billion deals. I just don't, unless you see an upward swing in oil prices. So maybe 12 billion is, can they fetch that? Can they fetch 12 to 15 on the open market in a year as a company? If you believe the Goldman Sachs report, oil's going to be $65. Yeah, they probably do get flipped. But if oil continues to stumble and we stay around here, I don't know. I think that, that's an interesting way to look at this deal, is maybe they saw this as an opportunity to combine and put themselves in a better position to go be actually acquired now, because it's just a merger. So acquisitions. This is a merger. Another interesting thing that I saw is, so the street, kind of gauging interest on the street here. I think half the people really liked it when you talk about analysts, investors. I saw a note from a Wood Mackenzie guy. Their analysis showed that, assuming Devon allocates its cash considerations that it was going to use for CapEx in 2021, and they use it to pay off some of WPX's 2023 senior notes, the combined company shouldn't have any maturities till 2026. So that's pretty good. Now, Devon's income statement doesn't look great, but now you're moving all down into the thing, or into, now that you're moving on into the Permian, not bad. Another thing that I saw is, so as you know, another interesting note is, why do mergers take place? Why versus acquisitions? Stu, do you have any? Do you know why that happens? There's a lot of different reasons.
Oh, sure. The people, that sit there and they want. I think you just nailed the one on this, and that is they want to prep up to be bought. I thought that was fabulous. Like, hey, that's great.
It's just an idea. I'm sure there's a lot of things that go into it, because there's a lot of reasons why you would merge versus get acquired. And I think one of the reasons why you merge is because they're what we call synergies. And hey, and if Stu, if you're a company and you've cut costs down to the brim, how do you cut costs even more?
Down to the bone.
Yeah, you merge.
Yeah.
The only way you grow after you've cut costs to the bone, and when people say, we're slashing G&A, well,
Yep.
that's because 75% of the people that work at WPX and Felix and what used to be Felix Energy, well, I knew a couple people that worked there, they're gone. I mean, there's about 75. I'm telling you. I mean, that's that's one reason why you merge, is because you say we can take over this. We can, the executives at both companies say we can lay off 30%, 40% of what would be this new staff if it was combined, and we can now double our acreage, and we can all still work it. Give ourselves nice little $1 million bonuses. Yeah, done. Sign the deal. Let's write the checks. So.
Right.
If you're a WPX or a Felix employee, you got shafted in this deal. You got absolutely shafted. And if you're a Felix shareholder, you got even more shafted. You got acquired for $1.5 billion. Now you're coming around, or if you're a WPX shareholder, you grossly overpaid for Felix Energy. And I'm old enough, as I mentioned in the pre-show, to remember December 13th, Stu. Get this. This is they have to disclose this stuff. When you formally offer to buy a company, it has to be disclosed. Get this. I'm going to read you to you. On December 13th, 2019, Mr. Muncrief, who's the former CEO of WPX Energy at the time, now CEO of Devon as of 8 o'clock this morning. Mr. Muncrief held a follow-up meeting with the energy company representative. They don't say who, because they're not telling you who. Not telling you who. They're not telling you who. But some energy company with whom he had met with November 1st, 2019. Let's look up private flight details. Let's find some private, because he's probably flying private. That was a corporate jet. He was on. During that meeting, the energy company representative indicated to Mr. Moncrief that the energy company would be potentially interested in exploring a potential transaction involving the combination of the energy company with WPX, aka the company. Mr. Moncrief advised the energy company that while he appreciated the interest of the energy company in WPX and its board were focused on executing the company's strategic blah, 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 destroying capital. During this meeting, the representatives delivered to Mr. Moncrief a preliminary indication of a preliminary indication of contemplating the combination of the company and the energy company. The preliminary indication of interest contemplated, and this is the spicy part, Stu, contemplated a premium to the market price of the common stock at the time. So not only did 7 months ago did WPX offer to get acquired at a premium, they were trading at 100%. Their stock was up like 60 more percent.
Man.
You want to talk about buying high, sell low, buy Felix high, lay off half that staff, sell low, merged with Devon, lay off even more of your staff. Ooh, that's a doozy. And then, excuse me. And there's this. During the breakout session, I wonder is that an Aramco session? A little breakout session? Is that the oil and gas conference? I think it's actually a Barclays, I think, is when you read it. I think it was a Barclays. Yeah, it was a Barclays energy conference. Sorry.
Theirs wasn't as much fun as ours.
Nah, definitely not. During this breakout session, the board discussed preliminary indications of the interest that had been provided to Mr. Market and blah, 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 including its economic terms and the premium to the market price. If you're a WPX shareholder, you got whoop. I think you got a examination. They asked you to bend over and touch your toes. You got examined by the doc.
Moon River. Hey, is that the whole fist, doc? That's out of Fletch, Chevy Chase.
So,
hey, real quick, you were talking about it doesn't hurt. I mean, you talk about the bone, right? Cutting to the bone. my dojo master, when I was in all my black belt stuff with my kids, did get my black belt, but our saying on the wall was, it doesn't hurt till the bone shows. So, that's why people merge. I thought that was a technical reason there.
Yeah, I mean, I think there's some, luckily, if I was a WPX shareholder and if I had been a long-term one, I would be depressed right now. But I think if you're a Devon share, if you're on the Devon side of this, I think this is a decent deal.
I think you covered it outstandingly well.
Outstandingly well. We need to get that. A lot of things we need to get on T-shirts, too. We need to open up an Oil and Gas 360 merchandise and just start getting all these. I need a beautiful day in the It's a beautiful day in the neighborhood shirt. I need that on a mug. Can I get that on a mug?
Oh, absolutely. And then good management, good numbers.
Yeah.
We got a few.
We're capitalists over here, so we'll throw your logo right under that if you just pay us enough money.
Oh, absolutely.
You don't even have to be good management.
What's a few billion between friends? What's exactly. A few billion?
How are we not in on this? How did we not get in on the rebrand for this, Devin? Give us a call, man.
Yeah, we could have fixed it. Half the price.
Yeah, exactly. It would have caused you a friends and family discount. So
absolutely.
All right. I think that's everything. It was a busy weekend, Stu. I mean, I usually try to, but obviously this Devin WPX deal. Email me, mtanner at Entercom Inc. Tell me I'm stupid. You can find my email in the show notes. I think we look at the levels for the week. As always, this segment is sponsored by Sandstone Capital Group. These guys do great research, guys. Just call them 303-907-6825, sandstonecg.com. Tell them the podcast sent you. It's the only way we get credit. Time stands 7:06 a.m. So pit opens in about 22 minutes here. 40.73 currently is where oil trading. Actually, it's taken off a little bit. I'd be interested to see what's coming across the news ticker here. Probably has something to do. Currently hitting up a top level right now. So kind of is real choppy last week. If you want to cover if you want to know what happened last week in the levels, please go check out our show last week, episode number 50. We're an old man now, so. But when I look at what I see this weekend, or what I look going forward, I think a lot of it hinges on what's going to happen Wednesday and Thursday with our DOE inventories. I think production will be interesting to see. I think if you go to we have a bunch of stuff on Oil and Gas 360 right now. If you go look at where oil production is trending, we've been running conflicting. We've had conflicting reports coming out from a lot of different sources. Some people say we've reached peak oil. Some people say we have. It'll be interesting to see what we do. I look at the biggest drivers of what price is going to be this week. One, I think we're back into news of the virus. I've been hearing things from around different parts of the country that things are getting a little creepier now. Things are starting to kind of wind back in, and I don't know if that's something because of the election or whatever. I don't know. I really don't know. So it'll be a really good indication. I think when we look, I'm probably bearish this week. When you look at it, oil's now currently spiking for it's had a good overnight session here. I'm just not sure oil needs to be 43 to 45 bucks. You know what I mean? I think the cap on this is 42, 43 bucks. If we do spike above that, great. I did see this is what I love Twitter for. I did have one of my favorite things to go is stripper operators. They tell you a lot about what's going on in the industry right now. So here's an idea. Update from a stripper operator. Shut-in wells will lift cost over $40 until October 1st. 14%. It's about 14% of their operations. Getting hedges set up with counterparties to grab some of the low 40s, maybe 25% of the production or whatever services they're debt. Determinations, working redeterminations right now should survive. So that's the update for our stripper friends, Stu, which is good to hear, especially it's not great, but they're in business. And if you're operating cash efficiently, you can make money in this time. And that's why I just don't think, and that's why, at these numbers, yeah, I don't know. The long-term fundamentals just don't look good, Stu. I think we're going to see stocks rise this week. I think on the nat gas side, I'm still waiting for 350 gas. Even that 12-month strip don't look like it. That 12-month strip still 316.
Well, think about it. You're going to have blue ammonia. You're going to have green LNG. You're going to have all the stuff made out of fossil fuels, and it's all coming around natural gas. It'll get there.
I'm in. Yeah, I think by caps, if you're looking to sell, if you're looking to day trade oil, one, good luck. Two, probably, I would say a couple levels. You want to look at 41.36 is a good selling level. I think 41.87 is another good selling level. A couple buying levels is probably 39.73. Point of control, 39.94. So the farther we drift away from that, could be a nice package deal there. Commitment to traders, I was looking at it, didn't really, pretty non-interesting on the commitment to trader side. If exactly what you expect. Hedge funds are cutting all of their long positions. Why? Well, they're just getting shorted out. That's what's happening right now. A lot of these hedge funds were getting short, and they're adding to what their long positions. Well, they're just re-getting up there. So and then we're talking about a week prior. So that'll be very interesting. Swap dealers are going busy on the short side, which makes sense. Everybody's trying to get their hedges in place for their redetermination process. What else do we have? Yeah, I mean, the way hedge funds trade oil is not the way I think the oil and gas. They're in it for a different purpose. Stu, you were going to say something?
No, I was laughing.
You're gonna laugh. So, man, it's been a long show. We miss anything?
I don't think so. I want to let everybody know we've got some great subscriber benefits coming around the corner. We are launching a ton of tools on Oil and Gas 360. And with the importance of ESG, we got some stuff coming around the corner, dude.
We have a lot of cool stuff coming around the corner. You can check it all out at Oil and Gas, at the world's greatest website, oilandgas360.com. But I think with that, we're going to go ahead and get out of here, let you guys start your day. Cue the music. Thank you for checking out the 360 digital closing bell here on the world's greatest website, oilandgas360.com. For Stuart Turley, I'm Michael Tanner. Thank you, guys. We will see you this afternoon for the digital ticker.